So, NIO seems to be the hot topic of the day, sort of how Tesla used to be back in the day, and it's probably generating as much of a split opinion as the US election. I asked on Facebook, Twitter, Instagram what people thought of the NIO stock, and I got such a variety of opinions. It's probably one of the first things that you need to understand is everyone is going to have very, very different opinions. You're going to have some people telling you it's the next big thing, it's going to shoot up like Tesla, you know, get in now before it's too late. And you're going to have others who are like, stay away, it's overpriced, it's a bad investment and stuff like that. Ultimately, it's your decision and your opinion that matters. But I'm here to tell you a few things you might want to consider before making your decision on whether or not to invest your hard-earned money into the NIO stock. I'll also suggest some alternatives if you are not quite ready to jump onto such a risky stock, but you want the exposure to the electric vehicle market. So let's start off with the market cap. There's a few things going around basically saying that NIO has exceeded the market cap of both General Motors and BMW. Now that is true, but what is a market cap though? Market capitalization refers to how much a company is worth as determined by the stock market. It is defined as the total market value of all outstanding shares. It is basically the share price times the outstanding shares. If the company's future growth potential doesn't look good, then sellers of the stock can drive down the share price, which will in turn drive down the market capitalization. It's basically a real-time estimate of the company's value. But one thing you have to remember with the NIO stock is that the share price is reflecting the future. Because they don't have a lot of data and profits and things like that, the current share value is completely based on what the stock market and investors think the company is going to do in the future. And as you'll see more in the analysis part of the video, you know, analysts are predicting that the company is going to grow and the earnings are going to grow and stuff like that. But ultimately, no one can predict the stock market, and this is the important thing to understand. Even if top-rated analysts are saying that a stock is probably going to go up, something can happen to completely change that. The other thing to consider here is Tesla. So, you know, loads of people thought, surely it can't grow again, surely it can't. And then it kept reaching new price points. And it grew, it stalled, it grew. It's a very volatile stock, but ultimately loads of people made loads of money. But I personally don't think that just because that happened to Tesla, people should expect that to happen to NIO. It's not to say that it won't, but it's not a fair like-for-like comparison. The next thing to consider is that generally across the world, the demand for electric vehicles is going up. More and more governments are deciding to focus on the environment. So as an example, the UK government announced recently that sales of new cars powered by petrol and diesel will be banned from 2030. Now that might feel like a long way away, but we're almost in 2021. So as time goes on, I think more and more governments are going to really focus on electric vehicles. However, the other thing to be aware of and consider with NIO is that they are backed by the Chinese government, and a lot of people consider that a big risk. If you don't understand why, just look at what happened with TikTok, with Huawei. You know, could this happen with NIO? Who knows? Maybe it will, maybe it won't, but it is a risk and you have to be aware of that risk before making your decision. The final thing that I wanted to mention before diving into more of the analysis is that they have a little bit of a unique selling point, and that is their battery service. Essentially what it is that they allow people to buy the cars without the battery and then to rent the battery when they need it depending on their needs. And this, I'm told, makes the car way more affordable for loads of people, because if you're aware, electric cars at the moment are incredibly expensive. This got loads of people excited, and I think is a big part of why it's so popular and the hype is going up at the moment. Let's firstly look at all the analyst ratings. So if we look at Market Watch, we can see here that the analyst ratings all kind of gear towards the buy. If we look at the stake cap, again, the analyst ratings suggest a buy. Although the one thing that I would note here is that their target prices are already below what it currently is at. So I think it's not quite the most up-to-date analyst view, but you know, it's not that much out of date. You know, the latest one from Deutsche Bank was on the 19th of November. And finally, if we look at eToro, you can see here that the analyst consensus again is very much geared towards the strong buy position. So overall, it does seem like all the analysts are thinking that NIO is a good stock to buy at the moment. So let's look at Simply Wall Street. You can see here, in terms of future growth, they are forecasting a 68% earnings growth. And if we look at the analysis checks here, you've got that NIO is forecast to become profitable over the next 3 years, which is considered faster growth than the savings rates. NIO is forecast to become profitable over the next 3 years, which is considered above average market growth. NIO's revenue is forecast to grow faster than the US market. It's forecast to grow faster than 20% per year, and the return on equity is forecast to be high in 3 years' time. So again, this is another source that suggests that NIO is a good stock to buy long term. It is interesting though, because obviously you can see here that on their valuation page, they are saying that it is 292% overvalued. But if we look a bit further down, we can see a lot of the comments here, you know, NIO is currently unprofitable, so we can't compare it and things like that. So insufficient data to calculate the PEG ratio to determine if it's good value. So a lot of the stuff that says things like 292% overvalued comes from the company not having enough financial data, enough profits and things like that to determine whether it's good value. So as I previously mentioned, the current stock price is purely a reflection of where people think the company is going to go in the future. In terms of their financial health, it does seem like their assets far outstrip their liabilities at the moment, which I was actually quite surprised by when I saw this. I did initially see it on Stake, and then I had to come on here as well just to double check because I literally couldn't believe it. I guess my expectation was that for such a new company that isn't really sort of selling that many cars, that their liabilities would outstrip their assets, but that is not the case. So this does seem really quite promising. They do, however, have a high debt to equity ratio, but if we look at the graph here, it does seem to have improved as of September the 30th. So it'll be interesting to see how that's going since. The final thing to mention on the financials is that the shareholders have been diluted in the past year, with total shares outstanding growing by 29%. So as they are a new company, I don't think this is too much of a red flag, but if this consistently happened, I would be really worried because share dilution usually isn't a good thing, especially for investors that invest a lot of their money, and that can lead to the share price dropping significantly. Not always, but again, it's a bit of a warning sign. So in terms of my own thoughts and whether I'm going to be investing in NIO. So yes, I currently hold a very modest amount in NIO in my eToro portfolio. It is up 24% at the moment. However, I won't be investing a lot more into NIO because of two reasons. First of all, it does not really fit with my risk appetite. So although I'm comfortable with a small proportion of my portfolio being riskier, I'm not comfortable with taking the risk with a bigger percentage of my portfolio. But secondly, NIO does have a lot of links with the Chinese government, as I've mentioned before. And for me personally, that is not something that I want to be investing in. I generally have very strong views about things like animal rights and human rights and things like that. And obviously, you know, if you watch the news or if you're aware of like the animal testing laws and things like that and everything else that goes on, China's government doesn't have a great reputation for their treatment of animals and people. So I personally don't feel comfortable sort of supporting the Chinese government with stuff like that, and that's mostly why I wouldn't invest in NIO more than I have. And that brings me on to my final point, which is the alternative investments. So if you decide that NIO isn't for you, but you really want a piece of the electric vehicle pie, then I've been told by my friend Darren, who owns an electric vehicle club up in Yorkshire, that there is an ETF that actually has exposure to electric vehicles. It is the Ishares electric vehicle ETF, and it currently holds about 81 holdings, I think, from what I've seen, from things like Tesla to Ford to companies I've literally never heard of in my life. It would be a great way to get exposure to the EV market with a lot less risk. so you know what I'll be doing on Monday morning when the market's open. The other thing is you could also have a look at the holdings within this ETF and do research on the individual companies that they hold and see whether potentially you want to invest in one of those as an individual share. Right, I feel like I've been talking a lot, so I'm gonna end this here. Hopefully you found this useful if you were on the fence, and I would love to know your thoughts about NIO. I might regret asking this, but I would love to know what you think and whether or not you're investing or you will be investing. And yeah, I will see you in the next video. Bye.